Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Past guests on our show include Brooke Reuter talking about contract for deed versus lease to own options, and Scott Reeves of the First National Bank of Coweta talking about commercial banking options. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. As you'll hear today, that is no small task. One of the big things that we do is keep your books. Keeping your books is not easy. You're going to hear all about it today, especially when you're a company at scale, but you don't care about that because you're just the owner of a single family property. What you do care about is that your starting balances match, that all the numbers are there, that the ins and outs are well accounted for, and that nobody's using the money from your tenants and your money outside of anything that they should be using it for, paying vendors, refunding you as the owner with a security deposit for damage that was done, et cetera. So you're going to hear all about that today from Taylor Ho. Taylor is born the son of a property manager and a CPA, and somehow he became the literal product of his parents, where his company APM Help primarily provides consulting, accounting, bookkeeping, and trust compliance audit help to property managers nationwide. You're going to hear all about that entrepreneurial journey, the journey that got him there from Appfolio, where he started, to building his own business. And there's a great story there. APM Help are experts in Appfolio, building and propertyware, Rent Manager, Rentvine, and help manage over 300,000 single-family residences today by providing bookkeeping services with a trust compliance and guarantee, and many other solutions to help keep your books clean while making you better as a property manager, if that's what you do. You'll hear that Taylor and I are rapping a little bit before we started recording, and we kind of jump right into it. So enjoy. Let's talk about the kids.
Yeah, we're talking about kids.
Oh my God. It is a total blessing. I never thought I wanted to have kids, but it's a total absolute blessing to have 4 kids. I know, four may be a lot for some people, but
I was a part. Not honestly, me. I had one sister, so it was just 2 of us. But growing up, I went back. My dad was the youngest of 11.
Oh my God!
Right? Yeah, like and the crazy thing there, and the crazy story he tells me is he at the time when he was born, he was only like 2 months younger than his parents' oldest child's first son.
His parents' oldest child's first son. I don't follow.
So essentially,
when he was born, he was 2 months older than his parents. When they became grandkids.
Yes, exactly.
Oh
yeah. So
God.
His parents were still fucking when the oldest child of the parents were.
So my wife's grandmother grew up in a quasi-twin relationship because she was born at the same time that her grandmother was also pregnant. And so her uncle, my wife's great uncle Joe, was her actual uncle, but they grew up like brother and sister.
Yeah. I mean, so that was essentially like my dad. Yeah. Like my dad essentially grew up like that's brothers crazy. With, again, like the uncle. Exactly. Yeah.
That's awesome. That's awesome. Taylor Ho, welcome to the show. It's good to have you on. I've been excited to talk to you. And I've been excited to say a massive, massive thank you for the work that your team did cleaning up the books of a company that we acquired recently. It was a significant push. I didn't know if it was going to get done, but it was great to have APM Help's help pushing that thing across the finish line. Just for anybody listening that doesn't have any context, we had our eyes on an acquisition target. When we dug under the hood a little bit, we just found that it was not at a place in the kind of trust accounting, everything with the trust accounting world, that we could actually bring it over. Books have to be super, super, super clean for them to come over into our system super clean, so that owner's money transfers over with a hard stop and with a concrete number. And we weren't able to do that. So Taylor's team came in. You guys mustered a lot of resource to work through a lot of different properties and go back years and getting everything done. Let's start with you first. How in the heck did you get into this world?
I tell this story and it's funny now, I guess, or you laugh about it, but I fucking grew up in this world. Excuse my French. But I literally grew up in it. My dad was a realtor, is a realtor property manager. My mom was a CPA accountant, right?
Wow.
I literally
Together?
remember, yeah, well,
They work
together,
in the same
like,
company. They work in the same company to
no,
work
no, no, no,
together.
no,
Or
no,
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 they're
separately,
okay.
separately,
Okay. Okay.
separately. But
Yeah.
like, I remember, helping my mom during nights, like literally on the number pad. I'm super fast
Yeah.
on the number pad because
Those guys.
I was
Not the one that
entering
spits
transactions.
out the paper.
Yeah.
Was it?
Yeah. No, 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 no. It
No.
was on a
Okay.
computer already at that time. But like,
I remember my dad
like,
using those.
like I was like nonstop doing this, and I was like, what am I doing? And now I realize I was reconciling. I was entering transactions so she could reconcile,
That's so
right?
funny.
And then, back in the day, right? I don't know if property managers these days remember, maybe some remember, but like you had to go around, knock on doors to collect rent,
Yeah.
right?
Oh my
I used to
God.
sit in my dad's Ford, or not Ford, Toyota pickup, right? We would drive around, he would knock on doors and collect rent, right? I'd be sitting there and I was a kid. I didn't
Yeah.
really know what's going on.
And you don't know any
And
different.
then yeah, and then, when I entered my teenage years, right, I started uh getting a little bit more muscular, let's say, right, than like a kid. And
Mhm.
so what did my dad have me do? We would climb up into attics in the summers in Houston, which attics in Houston in the summer are like 150 plus,
Brutal.
okay? And we'd replace hot water heaters, right, in my dad's rental properties,
Wow.
right, that he manages, right? Like my dad was essentially the like catch-all handyman, right? Essentially the
Yeah.
maintenance guy
Yeah.
for, a small portfolio, but like 50 units that he would
Yeah.
manage for friends and family and
Yeah.
stuff like that,
Yeah.
right? And who else is going to do that, right? And so back then, like I remember, we would, you know, take hoses and connect them to the bathtub in the upstairs bathtub
Drain
and
the tanks.
drain the tank
Yeah.
as much as you can because trying to haul that thing down the attic where like the ladder is yay
Yeah. Yeah.
wide and the tank you got to twist it a certain way to actually get it to fit down
And the hinges, they don't seem that sturdy, those attic
no,
ladders.
yeah, exactly, right. And all those ladders back then were, made out of wood, and
Yeah.
you're coming down with like 200-pound metal tank, right? Like, oh man, I remember those days, right? Like, so
You were
answer
born
your
into this world.
question, I quite literally was born into this world. I grew up in it. Look, I don't think my parents wanted me to ever be in this world, right? Like, I'm a typical Asian, child. Like, they wanted me to go be a doctor, right? And don't get me wrong, like first couple years in college, I had 4.0. I was on the pre-med path. I did, a global medical training in Nicaragua. Like I did stem cell research at UT Houston for a summer. Like I had the perfect resume to go be a doctor. And then I got arrested and spent a night in jail and my whole life changed.
Done. Over.
But outside of that, no, I realized actually pretty quickly after the internship that I did for the stem cell research, whatever, like the guy there, like the main guy was like, look, you seem like an enterprising guy, right? Like this job is not what you think it is, right? Surgeons are, he called them glorified bricklayers,
Yeah.
right? Like, and the research side, all he did every day was just filling out government grants, like writing proposals and hoping and praying that someone would give him money,
Yeah.
right? To then go do the stuff he actually loved. And even then, like, when you're running a lab or whatever it is, or doing research, like you're not actually the one doing the work either. So like he definitely was disillusioned from the
Yeah.
medical field. And so that plus like I was always an enterprising kind of guy. I was always starting some business. Like my hustle during college was I sold international edition textbooks, right? Like I'd make
Wait,
$20,000 every semester.
how'd
Right?
that work?
Oh,
So you're like buying them from somewhere else and you're importing
yeah,
them?
it's essentially you buy them from like there's distributors, wholesalers in like Singapore, Hong
Yeah.
Kong, wherever.
Wow.
These books are all exactly the same. They're just
Yeah.
soft cover and they have on the
Yeah.
back printed, not for sale in the US or
Yeah.
Canada.
Yeah.
But if you actually do any kind of research, the first sale doctrine effectively says once it's sold, you can do whatever the heck you want with it.
Yeah.
Right. And so I kind of did that. And there was like
Amazing.
like drop shipping. Long story short, I'd make like $20,000 in 2 weeks, at the beginning, first half of every semester. I hustled. Right.
Yeah.
That was my
Yeah.
college hustle. Came out, and I was supply chain growing in college. Right. So I was a business major focusing on supply chain. I'm in Texas. Houston's close here. Typically, all the people, like my wife, for example, who come out as a supply chain graduate, where do you go? You go to oil and gas, right? Or you go to like, the big companies with actual logistical problems, right?
Yep. Yeah.
Well, in the very first interview, or one of the interviews that I did, that my wife ended up at this company, but the interviewer was telling my wife, there's this one kid who like did our interview, and he actually said, you know, he didn't want to, sit behind a desk and like be in Excel spreadsheets all day long, right? And that like that's the job. That's what we do. And like
You can't have this job.
yeah, and like I said, like I don't want to be behind a desk, like in a spreadsheet and like creating slideshows. It's like that's not the job I want. And so, what's interesting is the first job out of college happened to be at a pretty small company at the time called none other than Appfolio.
Who?
Yeah. So,
I mean,
Appfolio.
wait, did you go to Santa Barbara?
No, so I was the first. I was in the first cohort of people they hired in their Richardson office in Dallas.
Got it. I mean, I actually went to school in Santa Barbara, and I thought in Goleta, which is Goleta.
Yeah, Goleta. Yeah.
Technically, Goleta, the school. And I'm like, maybe I missed an opportunity there to stay in Santa Barbara, the nicest place on earth. Anyways.
Yeah. I mean,
you were the first guy in Richardson.
Yeah. So I was the first, but like I was the first cohort that was hired into Richardson. Yeah. And I think the rest is history, right? So I was there. Oh, actually, most people don't know this, but like, I was customer support, entry level, right? Yeah. But of course, entry level, you become customer support, you learn the product, right? I was helping thousands. I myself closed thousands of tickets, right? Yeah. So if you were an Appfolio customer in 2011, 2012, and you search for my name, so Taylor.hou at appfolio.com, you likely got something from me. You probably have an email from me. Okay. But look, beyond that, I was gainfully fired within 7 months at Appfolio. So unfortunately did not hit my 1-year cliff to get any kind of stock or stock options. But obviously, Appfolio did very, very well. They needed
Did they fire you? Did they fire you as part of a downsizing thing, or they were like, you just don't perform, or what?
No. If anything, I was now looking back, and they probably have their own internal story about me, but like I was pretty disruptive, right? Like, look, I was like an entrepreneur. Like I wanted to change the world. I wanted to do it at Appfolio, and I saw lots of problems. I wanted to fix them, right? And when you're a Series B company, going from 1,000 to 10,000 customers, and you've got this like bulldog or pit bull in customer support doing things above his pay grade. Like I was literally told by HR, like, stop doing these things.
Down
like
now.
Yeah, like literally they said, like, stay in your lane. We just need you to close tickets.
At that time, you were how old when you were fired from Appfolio?
I was straight out of college. So
you're 22, 23.
Yeah, 22.
And so that was your first job. I also was fired from my first job. And my first like real job, like, I worked at a burrito place. They didn't fire me, but
sure.
I was fired from my first job. Was it hard on your ego, or were you just like, take it in stride and move on?
No,
it was tough for me.
I was moonlighting anyways.
You're like 1 foot out the door. You're hustle muscling.
I didn't. Yeah. I mean, I was moonlighting. I had another company that was paying me a full-time salary to work for them too. So it was easy. Yeah. It brought me back to Austin, the kind of bridged version. I started a company while I was in Austin, eventually went through 500 startups in the Valley. So I moved to the Valley, raised some money. My claim to fame there was pretty much like any video or like movie or anything that was worth anything around the kind of 2013, kind of 2012 to 2014 era. They were using my software to not only edit, but like to do feedback, like fast iterations on feedback.
Wow.
So that company at the time was called Remark. And unfortunately, that we ended up failing. But our direct competitor that outraised us, but 100% give them credit, they figured out the business model, like how to get paid.
Yeah.
They eventually sold to Adobe for $1 billion.
Wow.
Right. So that was what we did. We changed the industry, but like, man, I didn't know how to sell. I didn't know how to make money. Like we were one of the first ones to partner with like Adobe at that time when they were still selling box software. Right. And at that time, like nobody knew how to do APIs and endpoints and things like that. And so every time they would make a change to their API, it would break our integration. And as a small startup,
Yeah. What
like,
can you do?
what can you do? But also, like, every time they broke it, that's like $20,000 to
Yeah.
go fix it.
Yeah. Yeah.
So like that kind of stuff absolutely crushed us as a
Yeah.
small company, right? And yeah, anyways, I learned a ton, right? And then eventually jumped around or bounced around. I landed at a friend's company that was called Dynasty,
Hmm.
and they were doing the stock market for real estate. And eventually Dynasty pivoted. So
What does that
we
mean?
were
The stock
successful.
market for real estate? I mean, you can buy
Yeah, essentially
a
you
fractional
could
of a,
buy shares. Yeah, you could do fractional ownership of any rental property.
wow.
We proved that we were very successful in doing, like, just proving that we could do it.
Hmm.
And that's actually that's kind of the start of me coming back into this, right? But at that time, if you think about it, if you have a bunch of rental properties all over America, you likely can't support a full-time person to manage them,
Sure. Sure.
right? So what do you have to rely on? You
Property
have to rely
manager.
on property managers,
Yeah.
third-party property managers, wherever your units are, you got to rely
Yeah.
on them.
Yeah.
Well, as a regulated product, right? Because it's securitized rental properties, right? Securitization, like, we had to get FINRA broker dealer license, all this kind of
Yeah.
stuff. Like, what do they care about? What do the regulators care about? They care about clean, accurate, and timely
Hmm.
financials.
Hmm. Hmm.
I'm sorry, but what is the one thing third-party property managers are really fucking good at,
Yeah. Yeah.
right? Absolutely,
Interesting.
they're accountants and they're
Yeah.
experts at trust compliance, and like
It's crazy
they
how
make
much
your
accounting. It's crazy how much
yeah,
all of the property management softwares are just accounting with
yeah,
worlds of other things
mhm,
around them.
yeah. But fundamentally, it was, it's a regulated product, and we couldn't depend on the books that our property managers would give us, right? And I don't know if most property managers understand this, but like, when you send an owner statement, right, not on the same day of every month, by the way, like, an owner statement is not actually sorry, calling an owner statement is not actually a P&L. It's not an income statement. It's not a balance sheet.
It's a weird running
It's a
ledger of
weird running thing
events.
of cash in and cash
Yeah.
out,
Yeah.
right? And it's all mixed. And it's not like they tell you, oh, by the way, security clearing, this transaction's actually security deposits being transferred into your account. And then, oh, like,
Yeah.
it doesn't say that.
Yeah.
So we realized very quickly, right? If you wanted to securitize, eventually, if there's a world where rental properties get securitized and there's liquidity premium, you could do secondary shares, you could buy and sell this stuff. I had to figure out how to solve the fundamental problem of property managers and their books are not clean,
Yeah.
right? You can't trust them, unfortunately, right?
Well, it's
And
crazy. The crazy thing is, like, the property manager can be, us included, you can be 100% above board. You can be doing nothing that is dishonest. And yet, with the way things flow and move outs of properties to your clearing account, security deposit trust, then you have
sure,
to go back and edit a ledger. It messes up everything. And the history, the back to, first principles, the history, whatever the document that you're using as your truth can be altered.
can be
So you
altered.
send an owner statement, and the next
Yeah,
one you send the next month is different
is
because you went
different.
back and edited a accounting period.
Sure.
So it can be just crazy, and then it takes everyone hours and hours and hours to dig back through and figure
Yeah.
out what in the hell went on here.
And we're not even talking about, like, there are plenty of examples where a property manager literally is a rock stuck in a hard place.
Mm,
Like, if a bad tenant goes back and charges back the rent,
right.
right?
Oh my God.
You
The worst.
literally can't do anything.
Yeah.
The bank comes and takes the money.
Yeah.
You're now instantly no longer in compliance.
Yeah.
Like, whose money did they just take?
Yeah. They took
Like,
trust. They took trust funds. They took something
yeah,
in the rental trust account
yeah,
that puts you out of compliance. That's a really good point.
yeah.
So what do you
Like,
do? What is, so if
well,
the real estate commission comes in that
mhm,
moment and audits your account, what do you
you're
tell it?
screwed. Well, I mean, they understand. Thank goodness they're
Okay.
people and they
Yeah.
understand this. But, like, technically speaking, if you
You're out
look
of
at the
compliance.
literal basis, you're no longer in
Yeah.
compliance,
Yeah.
right? Like, that owner of that property is now negative.
Yeah.
Who is fronting or covering that negative? Your other owners or
Yeah.
your security deposits or in the best case scenario, the management company realizes this and they deposit their own money.
But you're not even some like the Oklahoma Real Estate Commission says that you can only have your money in a trust account up to the fees associated with the banking and the transactions of that thing. So I can't just put in $1,000 to cover it.
Technically
right?
speaking, no. Technically, in that scenario, you can, because it's no longer your money. Technically, what's happening is you're lending the money to the property, so it now becomes the property's money, and the property has a liability on it.
Okay.
Right. And so from a technical accounting bookkeeping standpoint, that's how we would do it. Where again, it's no longer your money, right? But again, like there's a lot of like CYA, like technically you have to have in your management agreement, you have to have the ability to do so, all this kind of stuff, and blah blah blah, right? And so speaking on this, right, like we're actually coming out with a product very soon, likely before the end of this year, where we're calling it trust compliance overdraft protection.
Wow.
Okay.
What does that mean?
It literally means anytime you're out of compliance, now obviously within reason, okay? Like you can't withdraw $500,000 and expect us to cover it, okay? But we're essentially issuing, or going to be issuing, working capital to property managers. And out of that line, kind of like a credit card covering, your checking account, but out of that line, if we detect that there's a compliance issue, we will automatically fund it. Exactly. We'll automatically fund your trust account. So it's no longer negative. We do the bookkeeping, we do everything for you. And of course, your job as the property manager to do your job, go collect it,
So will you take, so there's $1,000 out of compliance, it automatically goes in, it's at a 7, 8, 9% interest, whatever your line of credit interest rate would be. Wow.
Well, 3% just to draw it. So it's 3% for 30 days. So really,
great. Yeah. So do you automatically apply that 3% fee to the property? Because the property, who's liable there? I mean, the property owner's like, I'm not out of compliance. I didn't know that you were lending me money. Who's
well, so and that's kind of where the rubber meets the road. We're working with early adopters to figure out fundamentally, like you have to update your management agreement to then be able to charge your owner, saying, hey, technically you're the one who's like the money is from you, right? Like you got the money, you need to return the money because your tenant ultimately like charged it back. Right. But that's where we have to work with the industry as a whole to be like, okay, the owner needs to cover this.
I mean, I hate that they can just take money out of your account, because they do it all the time for application fees. And applicants come through, they see and they sign, they acknowledge that we are not guaranteeing them the home, that we accept applications on a first come, first serve basis. We give them on a first come, first serve basis for approved applicants. That you have to meet these standards, these criteria, 3 times rent and your income, whatever else. And then they charge back the thing. And it's like 40, 50 bucks.
Yeah, 40, 50 bucks.
I have to fight them. Or do I want to fight them? Do I want to build a ledger and send them to collections? What do you do? And ultimately, the credit card company always sides with a tenant who is acknowledged on multiple occasions that they owe this money, and they come out of it. It sucks.
And unfortunately, that's the cost of doing business as a property manager.
Yeah. Okay. Let's take one step back. APM Help. I understand this new product. Let's tell everyone, what's the suite of services that APM Help does?
Sure. Well, I'll start with our core fundamentals, right? And actually, our mission as a company, right? After coming, and by the way, that small company that I was talking about, the stock market real estate, they eventually pivoted. They did leasing automation, and they were acquired by none other than
Appfolio.
Wow. Right. So again, full circle brought me back. Right. Granted, all this
but you were working with them when the acquisition happened?
No. So
you're like, I'm back.
No,
I'm back.
No, it was almost like that, but no, like timing just had it. Yeah, like the timing had it where my wife was telling me also like, hey, this is early 2017. She was like, hey, we're pregnant with our first kid, right? Like, stop fucking around in the valley. Like, you need to move back to Houston, Texas, right? Because and put actual money on the table. Like she was my sugar mom, and she's my she was fronting and paying for everything. And so, anyways,
playtime is over.
Yeah, that time is over. Yeah, playtime is over. Make real money. And so I came back and I was like, all right, well, there's clearly a problem here.
Yeah,
right. It's a big industry. Nobody knows Appfolio, right?
Yeah.
Like I know Appfolio. Right. And I also had a lot of people who remembered my name. They looked me up on LinkedIn or Facebook, and they'd reach out and be like, hey, we have these problems. Can you fix them? Right. We'll pay you consulting. And, look, our rates are not what they were back then. Right. Lots of inflation, blah, blah, blah. But like I started it, and eventually I was like, I really don't like doing this. And so when you
But for,
really don't like doing
but
it,
for some of money, I'm willing to do. I'm
yeah,
willing
but
to do
for,
it.
so I just kept raising the
Yeah.
rates,
Yeah. Yeah.
right? And people kept saying yes. And so eventually I got to the point where, I was making more money at that time, quite frankly, than I am today, right? But I had no overhead, I had no team, it was
Yeah.
just me doing work.
Yeah.
But that's also as a consultant, like you're always chasing the next project,
Sure.
right? It's just very difficult. And so I was very lucky, very fortunate. I had a couple clients come back to me. This is bad for business, but they came back to me like, hey, we spent a lot of money. You trained our people. You cleaned up our books. Everything's good. But then now, guess what? Those people that you trained, they've sold themselves to someone else, right? There's always a bigger
Yeah.
fish,
Sure.
right? And so now we're back to square one, right? We can't keep doing this. It's a revolving door,
I mean,
right?
this is the fundamental problem of an open labor market. And you don't want
Yeah.
to go the France route, but you do all the R&D, you train people, fundamentally they're just now upskilled to go get more money somewhere else. And that's a
Yep.
quintessential large American business problem. But yeah, sorry.
Yeah. And so because of that, right, they're like, look, Taylor, we can't keep doing this. What if we just pay you to do our books? Right. And that was kind of like a mini light bulb moment. It was like,
Yeah.
that's interesting. Like,
Yeah.
don't get me wrong, I didn't go to college. I didn't go to, I didn't grow, I don't want to be a property manager's glorified bookkeeper.
Yeah.
But when they told me how much, then I was like, oh, well, why don't I give this a try? Because now I'm thinking, wait, but this is every month, right?
Yeah.
Every month you're paying me this, right? And look, I was very fortunate that my first two clients was 7,000 and 4,000 a month. So just in two clients alone, I was at 6 figures a year.
Yeah.
Right. And so remember, I also had my wife behind the scenes being like, put money
Sure.
on the table, like, and so I was like, well, here's 6 figures.
So you're there, you're
Right.
there reconciling there's 5,000 transactions in that folder.
Oh no, I mean, I'm there entering it. I'm there
wow.
doing everything. Right.
Yeah.
I was their accounting department effectively. Right.
Yeah.
And of course, don't get me wrong, like very quickly, I was like, oh, because I know AppFolio so well, it only takes me a couple hours a week to
Sure.
do what an entire team would do. Right.
Sure.
And so that was like, okay, well, how do I scale this? Well, so that was when my first two hires were in the Philippines, and I got very, very lucky, right? I personally trained them. One of them actually ended up staying with me all the way to 150 people on our Filipino side.
Wow.
Right. She helped us scale it all the way there. So again, I was very, 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 very fortunate.
Sure.
Right. But fundamentally, that was where we started. So what is our mission as a company? We're here to clean up the industry and hopefully make it better. Right. When we say clean up, we primarily mean the accounting. Okay.
Yeah.
We don't mean literal shit on the fan. Right. Like we mean your
job.
books. Yeah. That's somebody else's job. Like our job is we're experts when it comes to property management accounting in AppFolio, Buildium. Obviously we've expanded now to Buildium, Propertyware, Rent Manager, other softwares.
Yeah.
Right. But then the other thing that we realized was there is an existential crisis for a PM company. You could be clean, exactly what we said. You can be clean, you can be operating, you're very profitable, all this kind of stuff. But if for whatever reason you're not in compliance, your license can be revoked.
Yeah.
Right. And so we're like, and of course, like the story goes, right? It's like, of course, we had some clients back in the day who got hit by audits, right? And I'm not talking an IRS audit. I'm talking about a Department of Real Estate.
Yeah.
They're called differently. Real Estate Commission. In Washington, it's the Department of Licensing, but some kind of regulatory audit specifically around trust compliance or trust account audits. Okay. And what this really means is, as a property management company, the money you hold is not yours.
Yeah.
It's somebody else's. It's either an owner's, technically vendors if they don't cash their checks, but then also security deposits, which are consumer money, by the way. Okay.
That's the most
You'd understand. Yeah. Like you'd understand that's not your personal piggy bank that you can do whatever you want with. Right. Yeah. And I have this saying, I don't know if this is good for this podcast, but like we call it hookers and blow. Okay. Yeah. You can't go buy hookers and blow with trust money.
Yeah.
Okay. You can do it with management fee income.
Sure.
Right. Like
that's yours.
Once it's yours, that's yours. Do whatever the heck you want. But when we're talking about security deposits, rent,
somebody else's money.
That's somebody else's money. Don't mess with it. Right.
They had to avoid getting a lot of hookers and blow to put that security deposit with you. So do not mess with that money.
Yeah, no, exactly.
They had to scrimp and save. Yeah.
Yeah, they had to scrimp and save. Exactly. Right. So, but here's the thing. I mean, the reality is, and the reality is horrible, but we would say greater than 90% of the industry would not pass today.
Wow.
If someone were to walk in today, they're not passing. Right. And I'm not saying they're not passing with like 500,000 missing. Right. Yeah. I'm talking about like, look, technically speaking, even if $1 is missing.
Yeah.
Right. you're still no longer in compliance.
Well, then
This is someone else's money.
100%, because on a daily basis, the fluctuations in and out of an account. I mean, we moved to end of month accounting, I don't know, years ago, because when that scenario hits where the rent from last month was clawed back, you still have this month covering it, technically speaking. Now, if the rent, I don't know, if we've already pulled a management fee out, if rent's $1,000 and we've taken $100, I've now got $900 in an account, but $1,000 was taken out. It becomes really complicated really fast. I mean, 90% would be in that scenario where there's daily fluctuations and there's hundreds of daily fluctuations. It becomes really, really, really hard to stay in technical full-time compliance.
Yeah. And so, anyways, like that's fundamentally what does APM Help do? We do consulting projects to get people clean, catch you up.
Yeah.
And I really despise, it's not that I despise when property management company owners, when we ask them, have you been doing your bank recs? And they're overly confident, like, oh yeah, absolutely. Like, no question. Like my accountant over here, they're doing bank recs, right? Anytime I talk to anyone who's overly confident about bank recs, I know immediately they're dirty as shit.
Yeah.
Okay. Maybe not intentionally. Okay.
Yeah.
But when you're overly confident, right? Like it's not a good sign.
Yeah.
Right. Because if you actually are doing them, you know how hard it is to actually be clean.
Oh,
right.
God.
So from that standpoint, so we clean people up, right? Like, look, some people will ask me like, what's the worst that you've seen kind of thing, right? Like, look, we've seen plenty. They've never reconciled ever, and they've been in business for over 10 years.
How can you possibly do that though? How do you know stale
they
entries?
don't know.
How do you, how are you paying people their owner's distributions?
Well,
how are you doing that? How does your account not bounce? That's insanity.
Well, no. So a lot of times, keep in mind, right? You always have security deposits.
Well, they're not.
Right?
They're not mixed in with your rent trust.
Oh, so a lot of times they are. In California, for example, you can. It can all be in one trust account.
Oh my God.
Right.
Okay.
And then there's other places where the Wild Wild West, for example. Actually, I shouldn't say the state.
Kansas,
like,
for example. There's not even a license required. We have our broker's license because it's like, this is a profession. We are professionals. We're going to be licensed even if the real estate commission does not oversee us. But my God, you don't need trust accounts, I guess, in Kansas.
Yeah.
That's insane.
So I wasn't going to say the state, but you said it. Like in Kansas, it's the Wild Wild West. You literally
is that the only state that you know of?
No, there's some other states too. But look, there's also plenty of states that have rules and regs on the books, but they don't have enough auditors or investigators to do anything about it too. Right. So
what's the worst punishment you've seen for I mean, obviously you can pull somebody's accreditation.
Oh yeah. I've actually seen unfortunately a client, and granted they already were under license suspension anyways before they became a client, but like they got their license completely revoked. And so that, the second the primary broker's license is revoked, the company's license is revoked. Yeah. It's just this effect, like they had to fire sell.
Yeah.
Right. Like they was over. And it was very fast. Like the attorney general literally gave them 3 business days
to cease like literally operating.
Yeah. They were literally like, in 3 days, if you don't shut this down, the next visit, the next time you hear from me, it's going to be with a subpoena, a lawsuit, like it's over. Right. And so again, they're just like, okay.
That's tough. Yeah. Let me ask you this. You've got hundreds of people in the Philippines. Are you putting them through a 3, 6, 12-week program to learn Appfolio, Rent Manager, Rent Vine, et cetera? Or, I mean, did you start that way or did you start with people that were industry trained? They'd come out of property.
Oh, no. We had to train everybody. Yeah. We train everyone. We don't even do 3, 6, 12 weeks. We do 3, 6, 12, 9, 12 month. Right. Wow. So for us, our bookkeepers that come in, it doesn't even matter if it's Filipino, Latin America, or even American. We go through 3 months or 90 days of a probation period. No matter what, they've got to pass our training and tests to be able to even touch a client's books at the very basic level.
And so do you have an Appfolio instance or Rent Manager instance that's just like a test instance that you start messing around with? And then you go to the diagnostic page and you see that everything's out of whack and you're like, whoa, let's go back to square one. You got to you've messed things up somewhere here or there or whatever. They have to pass tests basically.
Yeah, effectively. Yeah. I wouldn't say it's literally, but yes, in a sense, like there's kind of like written kind of stuff as well as like, you have to show me, like we give you the example, you have to set it up and then you have to actually fix it as well. Right. Yeah. So like we're going through a lot of stuff because look, I know there's tons of people out there who would be like, oh, I've been using Buildium for 5 years. Like I'm an expert. I'm sorry. until you've used the software, you've supported it across multiple companies.
Yeah.
And ultimately you've had to support it with like random weird workarounds and stuff like, I'm sorry, you don't actually know the software to the level of someone like us. Like our consultants are all X software, right? The reason is because I'm X software. I was the consultant. I knew the knowledge gap or disparity between me and someone who's been using it for 10 years, right? Just because you use it for 10 years, you haven't seen like all the weird ways other people will use it, right? Like, and a lot of times, like, you don't know any better, right? You think you know how to do it, but in reality, there's probably a better way. It's just because that's how you were taught and that was it.
Yeah.
Right. But yeah, look,
I'm a AppFolio power user. Well, I should say on the accounting side, I'm not. I know AppFolio pretty well. I was doing something the other day and I went through the AppFolio help steps and there were 4 steps. I did the 4 steps. My diagnostic page was still out of whack. And it was because there's a 5th step that's not part of the help menu. That is apply the credit. I was like, God, what is going on? Apply credit. Why is that not it? That's a basic step. And it's not in the, it's kind of like the silver
back then, apply credit wasn't a thing. So the knowledge base article you were probably reading was written probably, it's too old. Apply credits is a newer feature, right? Back then it was called a $0 receipt.
Yeah.
You entered a receipt and did $0 and then zero, like they washed to zero. Yeah. Well, now they have apply credits, which effectively is $0 receipt, right? But like, so things like that. Look, the softwares are changing. Granted, the fundamentals, at least with accounting, aren't changing that much.
Yeah.
Right. I will say I'll follow up outside of consulting, right? So cleaning people up, catching them up, getting them to present day and compliant. We then, of course, it's like, your team, how did you get into this position in the first place? Right. Yeah. Do you want, after it's clean, do you trust that they're going to keep it clean? Yeah. Right. Like, probably not. So then we essentially have a per unit pricing model on, we can either do just bank recs, we do it every day, or we'll actually do full service, everything in your software with a $. So really it's like property based, like bookkeeping, right? And we effectively at this point now become, like the accounting department or bookkeeping department behind the scenes of PM companies. It enables you as a PM to focus on the things that matter, right? Sure. Like, are the people that would communicate with us, the owners of the PM companies, or they're the property managers themselves. They're out in the field doing whatever it is.
What happens when there's, I don't know, just weird stuff on the owner's ledger, on the owner's statement, and the PM doesn't have an internal resource. They don't know it well enough themselves to answer why there's some weird thing.
They call us.
They call you.
Yeah. When you're full service with us, you quite literally can chat us. You can text us. You can call. You have a dedicated account manager and they're there to make sure you're successful. Yeah. Right. So whenever that happens, like obviously we obviously ask just for our sanity purposes, like write down the problem. Sure. Right. Send it to us. We will typically write up or give you enough or train you, explain it to you to the point where you can then either forward, right, or copy paste and send it back, or you can explain it back to your owner very knowledgeably with proof of here's the statement, here's the P&L, like everything. Yeah. Yeah.
What are the most common bookkeeping mistakes that property management companies are making when they come to you? Let's forget for a moment that they haven't reconciled in 5 years, but
sure. What are the I would say that's the most common, first off, right? They're just not reconciling at all. Or they're reconciling, but they're not doing it in balance, right? So it's one thing to click reconcile, right? You can reconcile, but you can force reconcile, like you can fake them, right? Yeah. And a lot of people don't understand that, like, bookkeepers will like play around. They're like, oh, well, let me enter a bank adjustment and like whatever the difference is, let me just adjust it. And then like I'll hit reconcile and we're good. No. But like that a bank adjustment is called a bank adjustment for a reason, right? It's not your standard thing to do. Another thing, you asked this question, right? Journal entries. If you're using AppFolio and you're regularly having to enter journal entries, there's a problem. AppFolio is not designed for you to be entering journal entries, right? Journal entries should be used in like really just 2 scenarios in AppFolio, and it's very, very rare. Right? It's either non-cash transactions, so you're reallocating, which again, AppFolio gives you other options to do that anyways. Or 2, like it's a beginning balance, like one-time thing. I'm bringing something in or a new property and I got to load the balance. Fine. Right? But if you're using journal entries on a day-to-day basis, it's not right. I can
What
tell
do you
you
do?
right now. It's
I
no way.
see journal entries come through for tenant pays rent plus their insurance cost plus this, and then it bounces. You've got to you got to move money back around where you've already allocated the insurance costs, and there's a journal entry that kind of that puts that money back from trust to the rent from our management fee from our what we call 0147. What is that? Our standard our account to
Mhm.
the rent trust, and then the money gets moved in the bank to actually do that.
Sure. So that's effectively, yeah. So that's that's an other receipt. You can use a
okay.
journal entry to do that because an other receipt isn't tying to anything, right? You just type in some rent. So sure. Again, in very like acute scenarios, you can use journal entries. But even in that situation, I'd tell you don't use a journal entry for it. Like you should be entering it as an other receipt, right? Because an other receipt is effectively the same thing, but at least there's a little more context on the other receipt versus a journal entry.
Yeah. That's pretty nuanced. Okay. So the most common mistakes that property management companies not reconciling
first.
incorrectly.
Yeah, reconciling correctly. So just closing your books in general, they're just not doing it, right? That's a huge problem because everything is based on your books.
Yeah.
Right. So if you're not doing that, how can you, again, like kind of what you said, like how could you trust to be giving owners the right money or
It's insane.
Look, I'd say after that, the number one overarching problem is security deposits, move-ins, and move-outs, right? Stuff to do with security deposits, because most of the time it's held in separate accounts, right? And there's a disconnect between what happens in the software and what happens in real life, right? The easiest example is tenant moves in, pays first month's rent and security deposit in one form of payment, one check, right? Like in real life, what do? Right? Like you go to the bank, you deposit in one account, and you have to remember to move it.
Yeah.
Right. But it's not like, I mean, some banks will do this, but very few will be like, oh, when I'm doing this, by the way, I need you to move this portion to this account right here, right now. Like they're gonna be, no, just go online and do it.
And the real life example of this is AppFolio when they use the barcode at Walmart. That goes into our rent trust, and we have to move
it goes
that
into the rent trust.
Yeah.
But again, when it goes into the rent trust and it does it automatically, it's not like there's some notification that says, hey, by the way, you've got to remember to move the $1,000 security deposit into the security deposit account.
Yeah.
Right? Like they don't do that, right? Yeah, technically, if you know where to look, fine. There's always going to show up on your diagnostics reports. But most people, I'd say like over half of the AppFolio users we talk to, we mentioned the diagnostics, we show them that. They're like, I didn't know
that's
that
a diagnostic page.
Yeah, they're like, what is that? Right? And a lot of times they don't even to see it.
Robert, who you met, he lives in the diagnostics page, and he's always yelling at people that their diagnostic page is off. It's like who sits right here to my left is just like that's our constant conversation is diagnostics. Okay.
Yeah. And I mean, for good reason, right? Because it's good. Like AppFolio's diagnostics page, it covers like 90% of the issues that have to do with trust compliance.
Yeah.
Right. And, like in that situation, right? Like you come back, you move the money in your bank, but then you forget to move it in AppFolio, or you forget to hit complete bank transfer.
Yeah.
Or like, and today we have bank transfers. Back in the day, it was security clearing, right? It was these weird transfer funds between cash accounts option. That created two journal entries that use clearing as the like
that
the
still
offset.
exists. That still exists.
No, it still exists, but like now they opt for hit bank transfer instead.
Yeah.
Right. So like that was stuff where like that caused a lot of problems, and a lot of people are like, what the heck is a security clearing?
Because when you do that transaction and it puts 4 entries in or whatever, like you go what, and then you remove one of the credits or you delete one of the receipts.
If you delete one, the other one's still there. Like it throws everything out of whack. Yeah. Then you have non-zero security clearing balances or issues. Like it just gets all out of whack.
Yeah.
Exactly.
Yeah.
Right. Beyond that, I think not necessarily mistakes they make, but the complaints we hear all have to do with suppressed fees.
Yes.
Yeah. Suppression is a nightmare.
Yeah.
Especially if, again, you're not staying on top of your books. Right, but also just from an SOP standpoint.
But like the suppressed fee for the insurance is a good example.
No, yeah.
Got reversed. A great example. Now I've got to refund that money that I collected for
because you already collected it. Exactly. Right. Yeah. And we're not even talking about like if you collect it but then pay it out the month after. AppFolio suppression's weird. Like it can only really suppress in and out in the same month.
Got it.
And that's where you get the complaints from owners like, hey, my beginning balance and ending balance don't match. How is this possible? Right. All has to do with suppression.
Yeah.
Right.
And so what does a client of APM Help expect at the end of the month There's no issues with suppression. There's no issue with starting balance. It's just 100% clean. They don't have to think about it. If they have a question from an owner, they send a text message, they call,
they forward it. Yeah.
And it's all handled.
No, I mean, quite frankly, we are your expert AppFolio, or, replace AppFolio with any software accountants that not only have your back from a trust compliance standpoint or so regulatory standpoint, but also
is there some sort of guarantee, like a CPA says, look, I signed off on your account on your taxes.
Look, we guarantee trust compliance.
Yeah.
Understand, I don't want to say this is a marketing gimmick. We guarantee it, but we can't move money.
Sure.
Right. So our guarantee is it's only as good as if the client actually does what we say.
Yeah.
Right. But if you do what we say, which, by the way, because we're doing bank recs every day, right, and we have our own audit tool that's checking for trust compliance every day, like, we will tell you, Matt, you need to move this money because you forgot about it. Right. Yeah. And again, if you don't do it, that's on you. Right. Yeah. But again, like, we're absolutely, and this is where like the new products are coming in, right, where it's like we're trying to take this a step further by saying, at a certain point, we're not necessarily, quite frankly, moving money, but we're willing to actually deposit money to make sure you're in compliance at the end of the month.
Yeah.
Right. And one thing, just so everyone understands that listens, right, trust compliance can really only be regulated according to the bank statement. So inter-month stuff that happens,
it's not really important.
It's just not feasible. I'm not saying it's not important, but it's just like, it's not feasible for anyone to actually do anything about it.
You got to just clear it up by the end of the month.
Yeah.
Fund everything that's negative. And
exactly. So realistically, if you're trust compliant on the day of the statement, right, like pretty much every state is they're Gucci. Yeah. You're fine. Okay. Yeah. Now that doesn't mean in between the month,
you steal a little bit from the security deposit on the first and you return on the 30th.
Yeah. Don't go do that, because I mean, they'll just remember, right? Like, if they subpoena you, you got to give those records, right? But realistically speaking, trust compliance is done tied at the end of the month to a statement.
So who's your best client? A small mom and pop, or a company that has 5,000 properties under management?
No, all of our clients, 99% of our clients are sub 1,000 units.
Wow.
Like, we actually don't like bigger clients, or actually I'd say they don't like us, because inevitably at a certain size, most business owners get to the point where they're like, man, this is really important. I really should have a handle on this.
Yeah.
And it's a principle thing of like, I don't know if I really like having such an important aspect, because once you get to a certain size, you realize, like, holy shit, accounting is actually very important.
Yeah.
Like, my differentiator to my clients is the fact that I'm on top of the accounting.
I know exactly. I didn't send you a spreadsheet at the end of the month with the ins and outs. I actually have a direct from AppFolio accounting of your ins and outs.
Yeah.
That's a big, I hear that a lot. Like, oh, they didn't go through AppFolio, which is software that they use. They just send a spreadsheet.
Oh no. Yeah. No,
that's insane.
Yeah. Yeah. No. So you're right. So like that's where, again, like, look, our average customer profile, right? Average customer is around like 300 units.
Yeah.
Right.
We don't like a component. Like there comes a time when it's like, I need this to be in-house. It's less expensive. I've got the scale to do it, but anybody that's smaller doesn't have the need for a full-time person. I will say also, the dollar per door, which is a model that I hate, is the only, you guys are the only one that it makes sense, because you grow, as you grow with tenant turner, they're not adding another rack of storage space every time you add a door. So like for them to charge you another $1.40 or whatever it is really annoying. They're not adding another technician. They're not adding more code every time you do. It's a scalable product. You guys are actually, every time you add a door, you're adding more.
No, like we actually have more work. And we calculated this on average, right? Per unit, there's about like between 3 to 8 transactions that'll happen every month. So average about 5 transactions that happens, right? If you actually break it down, our cost is between $2 to $3 per transaction.
Mm-hmm.
Okay. Each transaction on average takes a typical person like 5 to 10 minutes to complete.
Mm-hmm. Mm-hmm.
Now it takes us like 2 to 3 minutes to complete.
Mm-hmm.
Right. So like that's how it all kind of susses out and breaks down.
Yeah.
Right. And again, like, as any business owner, right, but any property manager, like, you're going to go in these roller coaster waves. You're going to feel one day like, oh man, we're very profitable. We're feeling really good. Right. And that's typically the peak.
That's just because you
because
missed a bill from last month that you didn't pay.
well, that or it's like your people are like very fully utilized, like 90% utilized, right? Everything's humming along. And then you have a client because guess what? Guess what Matt's going to be doing? Matt's going out and saying, "Oh my God, we're doing great, right? Our clients love
Let's
us.
go sell.
We let's go sell." So now you go sell and you bring on 100 unit client. Now your staff are overworked,
Yeah.
right? They're banging down your door saying, "Matt, you need to go hire another bookkeeper, another maintenance, another head count." But that head count can't like they have way more capacity than just
They're not
100
fully
units,
utilized at 100.
right?
Yeah.
They're not fully utilized. So you literally go profitable
100%.
to no longer profitable to profitable, and like that roller. We haven't even thrown in turnover and all this kind of stuff.
It's
right?
especially prominent in new markets where you've got to, I mean, to manage 120 doors, you need a maintenance tech, you need a property manager, you need a salesperson. So like you all of a sudden are not profitable for many months. And then you get enough properties that you are profitable. Then you need to hire another property manager. It's the same cycle over and over. And then when you're
the same cycle
at 1,000 doors, all of a sudden you have the variability is small. Because when overhead is not so much.
What's interesting, what's interesting is that once you have a certain point, then you introduce middle management.
Yes.
The second you introduce middle management, your margins, you go from a top like very, very good PM company I've seen can do 25, 35% like net margins.
Yeah.
The second you need a middle manager, it's gone.
Yeah.
Yeah.
Because you need competent
right?
people that can lead other people.
No, I mean, any competent person that's a manager, like a director, regional, whatever you want to call them, right? Or GM for an office, 100K a year?
Yeah.
Right? Minimum?
Yeah. Easily
right?
Six
like,
figures. Yeah.
You know, like 100K, if most PM companies barely make 100K a year.
Yeah.
Right. And we can run the math on this, but like 100K out of a 300,000 unit PM, right? Or 300 unit PM is all of their profit.
Yeah. Yeah.
Right. So
100%.
Yeah. Like it's, yeah. And look, I think if you look at like the Pures, the Poplars, the Minds of the world, you know, they may not have as many cash flow challenges, but man, I guarantee they got people challenges.
Personnel.
Right.
This is
Personnel.
a people business in the end.
Yeah. It's a people business. You got
so
personnel
hard.
issues. Yeah. I mean, you have market issues, right? Like just you have problems up the wazoo.
Yeah.
And the second you drop from having, you know, enough units to support a team, now you're in like detrimental status.
Yeah.
Right. Like, because now
people
you're losing money.
It's such a challenge because we're in this weird balancing act as an industry. We want to keep our owners happy. Keeping our owners happy can mean that our tenants aren't happy. If our tenants are happy, that means that our owners aren't happy. And we're always in this weird thing and everybody hates us. If you've got a reasonable expectation for maintenance from a tenant, the owner doesn't want to hear it. They don't want to pay. They just did this.
Yeah.
They just remodeled the house. Sir, I didn't do the remodel and I didn't tell you not to scope the sewer line that's now blocked with tree roots.
Yeah.
I didn't tell you to buy the property. I didn't like all we need to do is get this person a sewage line that works. What do you want from me? And I can't do it fast enough for the tenant to actually be happy. And now both of you are mad at me. So it's a high stress, high pressure industry. And so personnel, it's all about personnel.
And look,
Taylor,
sorry.
Go ahead. No, go ahead.
Oh, no. Go ahead.
I was going to say, how do people that need APM help, help, how do they, what's the best way for them to reach out? Obviously they can go to the website and they just,
look, you can go to the website, but honestly, if you hear from this podcast, right, don't hesitate to reach out to me directly, right? My email is just taylor@apmhelp.com.
You're a boss when your email is just taylor@apmhelp.com.
Well, I mean, yeah, sure. But yeah, look, you can welcome to email me directly, right? Give me a little context, obviously. Tell me you heard from this podcast. That way I can tell whoever like, hey, my time on this podcast actually is returning a positive investment, you know, blah, blah, blah. But like, look, just reach out, right? I'm obviously a master delegator, right? It's unlikely that I'm going to be your consultant, right? You know, but I can get you the best people, quite frankly, on my team to take care of you. You know, and quite frankly, look, first 30 minutes is on us anyways. It's free. There's no obligations. So.
Love it. I love it. And I appreciate the help you had on our recent acquisition too. I want to say that one more time.
No, absolutely.
Taylor was born the son of a property manager and a CPA, which is an unlikely but beautiful combination. And he became the literal product of his parents, whereas company APM Help primarily provides consulting, accounting, bookkeeping, trust compliance, audit help to property managers nationwide. And now they're doing a new product that is enhanced trust compliance with the line of credit to
Working capital. I mean, look,
that.
we're doing a ton of other things as well. I'm back to innovating, right? We've got AI receptionists, right? We talked about these people problems. We got AI after. We got so many things coming down the pipeline. I'm excited. I'm supercharged, right? The next 5 years, I think, is going to be fantastic for our industry. What's not is kind of what you had already mentioned, right? Like we're doing a job that pretty much no one wants, right?
But you know what? It's a really profitable business. Trash routes.
Sure.
So sometimes the things that are the least sexy are the most profitable.
Absolutely.
And people need that. People need it.
Well, people want to do it.
APM Help is they're experts in Appfolio, Buildium, Propertyware, Rent Manager, Rentvine, and they help manage over 300,000 single-family residences today by providing property bookkeeping with the trust compliance guarantee and many other solutions to keep your books clean while making you better as a property manager. Reach out to APM Help if you need any of those services. Taylor, it's been awesome to have you on the show. Great rapping with you.
I appreciate it. Thanks for the time.
See ya.
Cheers.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.